everybody. Good morning, good afternoon, good evening, depending on where you guys are at. I hope y'all are having a good trading day so far. Let's go ahead. We'll start with SPX. And then, of course, if you guys have any questions about the market, about strategies, indicators, maybe trades you're in, this is a perfect time to ask those questions. I can really go and dive into detail around it, give you my 2 cents on the analysis, and we'll go from there. So, hey, Mirza, good to see you. Hope you're doing well. We'll start with SPX. For anyone who was in the small account mastery and jumped into that NDX trade I was debating about, well done, because that had a nice follow through lower. Should have been close to, if not 100% return on your risk, depending on your fills. Hey, Craig, good to see you. Rodney, you as well. Rodney's asking, Mara hasn't had a daily chart squeeze fired, but is extended from yesterday. What should we do here? I can certainly give you my 2 cents on Mara. Now, if you're in a specific trade that maybe one of the other traders are in here at Simpler, then I'm sure they'll give you their 2 cents on, how they're managing and analyzing that trade. But I'm more than happy to pull up the charts and give you my thoughts on it. And hey, 007, always good to see you. Hope you're doing well. Hope your trading week's been going good. How do I like the move on BTC? We can take a look. Take a look at Bitcoin. So starting with SPX, though, we are finally getting a little bit of a pullback after the strong run to the upside, right? We have momentum starting to show us a red bar today. Now, it's not at the top of the axis for momentum, which is usually where you get that peak exhaustion level, but it is rather close. So if we do get a few more days of a red bar in a row on top of this one, then that's a good sign that we have hit a point of exhaustion and could either start to see the underlying price stall and consolidate, or start to actually see it pull back down into a stronger support level. Certainly, if we could get back down towards the ATR trailing stop or the 30-period simple, and that ends up holding support, that would be a great opportunity to potentially buy back in. One, because you're buying in at a better support level. There's a lot of room to play back up towards the highs that we've had recently, if not for the trend move to the upside. And two, right, if it starts to falter from here, it's a quick cut of the trade. It's a quick way to protect your capital and then, go about your day rather than trying to go long here and then potentially do it. Now, I would like to see whether or not this 10-period simple holds for a quick overnight potential move. We do have a bullish divergent bar that printed yesterday that has the high right back up near 4,400, 4,415. And depending on how we go into the close today, might have the opportunity for a second bullish divergent bar. Now, keep in mind, we've talked about this before in here, but back-to-back divergent bars can be an overall sign of consolidation. We saw that back here, for example, where technically the signals followed through, but overall it was just a range of chop. Hey, Daniel, I'm doing good. I hope the same is for you. Hope you're doing well. So back up to the daily chart here, though, we do have several divergent bars in a row that we want to be mindful of. But if we can get another bullish divergent bar to print off of support, and we have the one that's valid from yesterday, could make for a quick overnight trade. And what I would be looking to do personally, if this ends up printing, is one of two strategies. The first one I would consider, both of these would be out for Friday's expiration, mind you. And the reason why is because Friday would allow for the 3-bar follow through, specifically on the first divergent bar that printed. But if this can end up holding, and let me make this bigger for you guys over on Twitch and YouTube. There you go. You can see the option chain a little bit more cleanly. But there are two ways I'd go about trading this. The first one would be some sort of credit spread or unbalanced butterfly, basically playing the premium off the trade idea. So the 10-period simple currently is at 43.53, so that's right by the psychological level of 40.50. So if we were to go with, for example, the unbalanced butterfly, that is a combination of a standard butterfly, which is what you see here, on top of an extra contract of the credit spread side of the trade. And so currently that's about $1.10 credit. That's certainly not too bad for Friday. Um, if you could get around $1, that is. So let's just, I know the mark is jumping around a lot, but let's say you get filled at $1 to make math simple. So if we remain out of the money, if this does bounce up back up to 4,400 and follow through with that higher high, then you get $1 profit, right? That's the profit is the premium that you took in. If, however, we do continue to see some weakness in the market and it pulls back, the idea is that we want it to maintain the 10 period simple as support, at least into Friday's close, right? We don't necessarily want it to break it. So if it pulls back and holds the 10 period simple moving average on the daily chart, if it can maintain at or above 43.50, then you actually have a max profit potential of $600. That's the $5 width of the spread plus the dollar of credit that you received. And on a one lot, which is one contract style trade, which is what this technically is, then it's a $600 profit. The risk starts to really come in if you break below your short strike, which is 43.50. So if you start to break below that level, then you have to be okay with the capital risk of $4, which off one contract is $400. So not too bad of a risk versus reward in regards to the max profit potential versus the max risk. And of course, if all we can do is stay out of the money on this, then we can let this trade expire worthless for a quick win, lock it in, and move our capital onto a new trade idea. So that one actually doesn't look too bad to me if we can get this premium. Now, personally, I wouldn't put this on right now. What I want to see is whether or not into the close today we can hold the 10 as support. Because if we start to break lower and we can't hold this, given the run up that we've had, it would make sense to get that stronger pullback, in my opinion, to try and maybe get a little bit more of a reversal, maybe have momentum reset. And so I would want this to confirm that it's holding into the close today for a better probability that we might get the bounce up or at least stall here into the end of the week. Keep in mind it is a holiday trading week, so it's not too surprising to see the volume be a little bit lighter going into the holiday as well as coming out of the holiday, because that's when the big boys, the hedge funds, like to take off, their extra vacation days around those market holidays. So that's not too surprising. The other way I would look to trade this is to look for a move back up into 4,400. So to play it a little bit more directionally. And in this case, it's a much smaller total capital risk. Instead of $4 of risk, you're only looking at the amount that you pay for the trade. In this case, $1.65, $1.70. So it's a smaller on the risk side, but it is also smaller on the max profit potential. Instead of $600 for a max profit potential, here your max profit potential is around 330, 335, depending on your fill. The downside to doing this style trade currently is that you need the move to the upside to occur, right? You can't just let theta decay work in your favor, have the trade completely sit out of the money and allow for a profit. You need that bounce higher. You ideally want to see that follow through of yesterday's bullish divergent bar back up into 4,415 cents for this spread to then be all of a sudden completely in the money. And then you could look to close it out for the quick win. Or, of course, those of you familiar with the profit recycling strategy could look to profit recycle it for a win as well, and then set yourself up with a bonus trade going into the close for Friday's expiration. So, those are the two different ways that I personally would look to play this move. Um, Now, the downside is if we do really keep rallying up into the close, we might find ourselves back at 4,400 by the end of the day. So that would be the downside about waiting on the setup into the close. But I would like to at least maybe get a little bit more confirmation that we're breaking hourly resistance of the 10 period simple. Or, like I said, wait into the close of market for a little bit more of that confirmation that it's holding support. Correct me if I'm wrong, guys. I don't know if Powell's still talking, but I know he was talking earlier today to the House. So that can, of course, influence the market anytime a Fed opens their mouth, especially the head of the Fed, which is currently Powell. It's not uncommon to get those intraday market swings based off whatever he's saying. So that's why I've been a little bit hesitant to take the intraday setups today, though there have been some nice ones that I've pointed out earlier. But if he's done talking, then that might give us a little bit more stability to jump into this sooner. If he's still talking, I would at least wait until he's done. If not, maybe wait closer into the close today to confirm that this is going to hold. So that's what I'm seeing on SPX right now. We'll see whether or not that follows through. If there's any symbols you guys want to look at, I know we have Mara and BTC. Let me know. So he's still responding to questions. Thanks, Nava. And the Q&A mic is happening now. Okay, so he's still talking. Yeah, he loves to hear himself, doesn't he? Let's go back to the daily chart here. We'll start with Mara. We'll pull that up. Yeah, keep in mind, guys, because the market, of course, is looking for any sort of clue about what Powell might do in the future, right? Is he, there's been a lot of talk, both um, the most recent rate well, technically it was a pause, right? The most recent pause that we had whenever he did the Q&A session then, as well as the prior one, they were hinting at that possibility that we weren't going to do cuts. And for those of you familiar with the Fed futures, y'all know earlier in the year that the Fed futures had priced in a potential rate cut later in the year, like closer into fall into winter, with that possibility that we're done with the hiking, we might pause, and then we might look to actually get some cuts. And so on the not the last one, but the one prior, he basically kind of nixed that idea like, guys, we're not looking at cuts. We might pause, but we're not looking at, any cuts right now for the market. And part of the reason why people thought there could be cuts was at least one part of it was because of what happened with Silicon Valley Bank, right? With some of those regional banks going down. And so that was kind of the thought process of, oh, banks are failing. We saw this in 2008. We might get more rate cuts again. And so he kind of nixed that idea. He was like, nah. And then on the last session that we had, the most recent Fed week, which I think was last week, if I remember correctly, I don't know, the days kind of blend together, but he mentioned on the most recent one that we might actually do some rate hikes again, that the current one we're pausing, but the rate hikes still might be in the future. And so the market so far has done a pretty good job of saying, okay, like we'll anticipate that. Um, but of course, if it's something that they don't really want to hear, or something that's a bit more surprising, like maybe the degree of rate cut that they'll do, if there's any sort of hint of that during his talk with the House today or with the Senate tomorrow, that could influence the market, especially from a more intraday perspective. So it's something just to be mindful of if you are doing intraday trading or like to intraday trade like I do. And yeah, Mike, absolutely. COP will add that to the list. Just be cautious of how he can sometimes influence the market in a bit more of a dramatic way, if you will. Now, Mara, well done for this one. Did anyone jump into this? Are you currently in this, Rodney? Because it looks good to the upside, I would say. Now, here's a few things to be mindful of on how this can actually keep going. And I know this is something that we've talked about in here before, but maybe for those of you who are new or just don't remember, the reason why this one might not pull back immediately, well, there are a few different reasons. So let's talk through them. The first reason is because it made a third deviation Bollinger Band snap. And what that means is that it has exceeded, the underlying price has exceeded the third deviation Bollinger Band, which for those of you who don't know is that outside blue line that I have on my charts. And when you exceed that level, it, in my head, causes almost a case of FOMO, right? At least that's what it appears to do on the underlying price. Because what happens is anybody who was long who wanted to be in this trade is like, oh my gosh, I'm not in the trade. I need to jump in, right? They have that case of that fear of missing out. And so they jump into it. And then on the flip side, anyone who was short is like, oh my gosh, I was short on this. I'm getting blown out of the water. I see this huge red in my account. And so I need to protect further capital. I need to jump out of this trade. And so by shorts covering on top of longs piling in, is kind of what keeps this thing stair stepping to the upside. And here's a great example of that. There's a third deviation Bollinger Band snap here. And so when you have that happen, there's a good probability that either the price will stay within the daily range of the bar that broke the third deviation Bollinger Band, or it will keep moving in that direction. So in this case, this was on the upper Bollinger Band, so you would see the continuation to the upside. So that next trading day, we stayed within our range. The following one, we got the higher high, made another third deviation Bollinger Band snap. The high of the day broke the third deviation Bollinger Band. Then the following day, third, we had a higher high. I wouldn't count this as a third deviation Bollinger Band snap, though. The high got close to the third deviation Bollinger Band, but it didn't technically break it. And then you can see that following trading day, we stayed within the range. We stayed within the range, and now we started to get back inside the comfort zone of the second deviation Bollinger Band. And once that occurs, then, right, the quote unquote normal way of trading applies. In this case, we had a bearish divergent bar. And so we started to get a little bit more of a pullback down into support. So the reason why this one could keep up is first and foremost the third deviation Bollinger Band, right? Yesterday, strong move to the upside broke that level. So what happened today? It's continuing to the upside, broke the third deviation again. So once again, the same rule applies every time it breaks that third deviation Bollinger Band. Either the next couple of trading days, we'll see it kind of stay within this range, right? That's a high probability. Or it could actually continue to the upside. Now, there are a few other cases that tell us that it could, stay in this range or continue higher. The first one being momentum. Notice momentum is just now picking up off the zero line. So that is a really good clue that there is a lot of room left for this to move higher, right? We have plenty of room until the top of the axis where we hit exhaustion. On this last time we had a third deviation move, notice what happened with momentum. We got not all the way to the top of the axis, but we certainly got higher than we were now. And then we started to stall. We got some red bars, and that helped confirm the top to bring us back down, right? We also got a cancellation of our bullish signals. We had a bullish signal on the compound breakout tool that started to cancel out. So that was another clue that this was going to drop if you hadn't seen it already. Here, still a valid bullish signal on the compound breakout tool. So that could help with the strength in continuing it higher. The last thing, which I'd argue last time had a little bit of, but certainly not as much of a squeeze as we see here, is the squeeze pro that's printing. So here we had a squeeze print for a few days. It started to fire to the upside, and so that helped with that strength and that greater than anticipated move. Here we had a squeeze setting up during this consolidation, not surprising. Nice bounce up. But notice what's happening. The squeeze is still technically printing. It's still in a low compression squeeze, which means it hasn't technically fired yet to really keep going. And for anyone who is already in this trade, well, that's good news for you because that gives you a higher probability that there's still room to play this to the upside and to continue with that strength. So in this case, Rodney, I don't like chasing things when they're like this, but I don't know if you're going to necessarily get a strong pullback into support to allow you that reentry. So for those of you who are feeling that case of FOMO, one, I would say try not to trade off FOMO, right? There will always be another chart set up, so just go and start scanning for another one. But two, if you're like, no, I was wanting this, I really want to play it, like if that's just stuck in your mindset of trying to jump into this, then I would say please, 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 just add a few more in there for good measure. Consider doing only a portion of your normal capital risk. And the reason why is, let's say it does continue higher. Well, great. You have a little bit of risk in the game and you're playing it to the upside and you're looking at profits. Well done. But if we do end up getting that pullback, right? Because we're not in the comfort zone. So we know that at some point we'll consolidate or get a pullback to allow the Bollinger Bands and the moving averages to catch up with the price. So if that does happen, one, you're managing a much smaller amount. Meaning, if we go back, test support, and support holds, great. You can build into your normal risk tolerance at a much better level to jump into a bullish trade at than doing so when the price is floating up here. So if your normal risk tolerance is, let's say, $500, maybe you only do $150 of risk at this level, maybe 200 of risk, but you don't risk the full 500 here. That way, if it pulls back, holds support, and everything still looks good and is valid for that bullish run, you're not overextending your capital trying to cost average it or trying to build into a new bullish trade idea. Instead, you're building in to your normal risk tolerance of $500. And that's just an example. I don't know what your risk tolerance is. That varies per person, per account size, but that's the idea there. The second reason, though, why you would consider a smaller capital risk here is because let's say we pull back and then the pattern breaks, right? Let's say we pull back, support doesn't hold, maybe some bad news comes out for Mara, and we start to drop back down to the downside. I've certainly seen that happen before. Well, you do have some risk out there, right? That's the downside. But the benefit is you didn't risk the full 500, right? It's a much smaller capital risk that you're then managing versus that full $500 amount at a level that you really probably shouldn't be jumping in at. So that's what I would say to do, that if you're really feeling that you want to participate on this, that there's still plenty of room to the upside and you want to be a part of it, then just do a smaller capital risk. And JC, I see just mentioned that there is a weekly squeeze. So let's pull up the weekly chart. Wait for this to pop up. I don't know if anyone else's Thinkorswim is slow today, but mine does not seem to want to be going fast. A little frustrating. There we go. So we do have a weekly squeeze. There it is. Momentum is above the zero line, so that helps for the bulls. There is room to move higher, but it's pretty flat along the zero line. And what I mean by that is when you zoom in here, right, it's still kind of hard to see the bars. They're kind of just hugging this red horizontal line, which is the zero line. And so that can usually be a sign of consolidation. So you want to be a little mindful of that. The compound breakout tool is still technically a consolidating signal, so it hasn't quite given us the bullish trend signal I'd like to see. We do have Bollinger Band starting to open up, so that's a good sign. We are holding our 10 and 30 as support, but we are trending below the 100, right? We've been actually in a bearish trend. We finally started to consolidate. We're attempting the bounce here. The good news is that there's room to play up into the 100, right? The 100 period simple currently is at 1934. The underlying price is at basically just shy of 1250. So there's room to play this for a continuation higher. And that might actually make a good target to the upside. So I don't think it looks bad. Not the best, right? But certainly not the worst. So if you really felt the need to jump into this, and of course you maybe wanted to give yourself time to play off that weekly squeeze, you might go out here to July. So it's pretty inexpensive for, what it looks like here. And if your risk tolerance allows it, you might consider going in the money, giving yourself that higher delta. So it's a zero point 0.7 delta that we're looking at here. It's the 11 strike, and it's about a 236 cost basis on the mark currently. Certainly a decent amount of open interest. If this is a little outside your risk tolerance, you could, of course, go with a smaller strike. You could go with a vertical spread, right, to help reduce that risk. So here's a 3-point width spread. It's 96 cents. It's a 205 profit potential, so not a bad risk versus reward. And then it gives you plenty of time to try and continue to play this trend to the upside if you think it's just going to keep stair step higher. And of course, with it being 30 days out on the option chain, it also gives you time to potentially sit through a pullback, to build into the trade, to play the weekly setup. So the good news is Mara's rather inexpensive, right, on the option chain further out in time. So it could certainly, even on smaller accounts, help keep you within your risk tolerance to play for the move higher. But it's not the best spot, right? Ideally, you're already in the trade and you're starting to scale out of profits, but it has certainly still room on momentum. And with the daily and the weekly squeeze, has room to really keep picking up if you want to. And then, Mickey, what kind of bars are those? They don't look like candles. They're just bars. So I'll go over here to my settings and show you appearance. So it's just a bar chart. I don't do candles. And if you're talking about the different color of bars, these pink and like white looking bars, those are divergent bars. That's an indicator I have here at Simpler Trading. And it helps identify a potential higher high or lower low within the next 3 bars. So it can be great for like a quick overnight trade to try and lock in a quick win that way. And then sometimes, of course, when you pair it like with a squeeze or with bullish signals, it could be a great entry for a longer term swing move as well. Just depends how you want to trade it. But that's what those two different color bars are outside the standard red and green ones. Yeah, T-bird, exactly. Fast market, slow think or swim. That is theme for I feel like this. And Rodney, of course. Always happy to help out. Let's pull up Bitcoin, see what crypto's doing right now. The one crypto that matters, right? And Rank's asking with the $500 challenge you have, you use the call back spread option or better option strategy. So I do quite a few different strategies for the $500 challenge. I'll do things like broken wing butterflies. Like a lot last year, we did end of day pins with broken wing butterfly trades. That hasn't been the best strategy for this year just because it's a different market environment. So we have to switch gears and go with strategies that fit. But I will do long calls and long puts. I'll do vertical spreads. I'll do, like I said, broken wing butterflies, standard butterflies. It all depends on what the chart looks like versus what the option chain is showing me for risk. And I mentioned this earlier today in the small account mentorship, but I am looking for new trades. I am very light in my accounts right now. I think outside of those longer term bearish trades that I had on, based off that quarterly signal that we talked about a while ago, which isn't following through at this point. So those will probably be losers. Outside of those trades, I only have one trade on, basically. So I am really flat right now. I'm mainly in cash. So I am really looking to try and find some new trades, both for the challenge account as well as, my other trading accounts. So I've been doing scans this morning trying to find something that I like, but if I do see something for the $500 challenge account, I will let you know. And for anyone curious about the $500 challenge or wondering when it's going to reset, July 1st. Well, technically the 3rd, right? Because that's the first trading day of the holiday. But July 3rd is when we'll reset the account back to $500 and then look to trade it for the month. So I did a little something different at the start of this year where we did it for the first quarter where I risked $500. But starting in July, we'll go back to the monthly challenge of it being each month. So, and then for Bitcoin, let's see, we had a squeeze. We had recent true lows. So that kind of helped give you a potential place to buy in at, right? The last few times we've had true lows, we're back here. And you can see it had a great run to the upside there. You had some true lows here that printed on this downturn, and then that allowed for a move higher overall. We had one true low here that didn't quite work. Well, I guess it did for the short term, right? It allowed for a quick bounce. And currently, if you bought in there versus where we're at now, you're profitable. You had some true lows print here, and then you had some right here, and those are both profitable on the move higher. So I do like how it basically went down, broke the 100. Never a fan of that, but for the most part, it didn't get into a bearish trend, which is a good sign. Ended up holding. We're bouncing back up here as well in Bitcoin. Third deviation Bollinger Band snap, right? So there's a good probability that the next few trading days will either stay within this range or we could continue higher. We have a squeeze that's starting to fire to the upside, so that helps out. You have the bullish signal on the compound breakout tool, which helps. Momentum still technically below the zero line, but if it can start to cross above the zero line, that's a bullish trend signal, so that could certainly help as well. So yeah, it's looking good. I will say though that there is some price resistance anywhere between 30,000, which makes sense. That's a huge psychological level, to 30, maybe 3,100 on the high end here with these prior highs. Technically, it's like 30, 945. So I would be a little bit mindful of that. We've seen that a lot this year where everything looks solid on the other indicators, but you're stuck at a price support or price resistance, and then that ends up beating out everything else. So if you are in Bitcoin and you're, looking at this as a short-term play to jump in and jump out of, not a bad spot to consider targets, but I would consider maybe leaving a little bit of a runner on because of the squeeze firing, the room on momentum, and that third deviation Bollinger Band snap that might give us enough of a push to get us past price resistance and go back into a bullish trend. If it continues to stall here, though, then maybe look at protecting the rest of your profits and wait to see if we get another pullback or at least consolidation to allow the moving averages to roll up off the 100 and catch up with the price. And then if that happens and it holds, that could make another buying opportunity, kind of like what we saw back here. So that's what I see for Bitcoin, at least Bitcoin futures right now, for those of you curious. And then Lynn's asking, can I look at SM? CPE Energy is doing good at breakout levels? Yeah. So let me write those down, add them to the list for today. And then 007's asking, do I use voodoo lines or quant pivots to compile daily levels? And of course, always happy to give you my 2 cents on Bitcoins or whatever you guys are looking at for the day. I do use voodoo lines, certainly when people point them out, like, for example, I think it was pivot lines that was talked about in the small account mentorship. Maybe it was a quant level, but so we were looking basically at a bearish move here on NDX a little bit earlier, around 9:30ish, and I was like, "Yeah, this looks like it wants to roll over." I don't ask me why I didn't take it. Well, I can tell you why. It's because Powell was talking, and that always makes me a little hesitant. But it, it was a good setup, and anyone who took it, well done, because you got the follow through to the downside I was looking for the quick intraday win. Um, but somebody had mentioned that there is a quant or voodoo line, something around 14,830-ish range, which is also right by my daily support level for that. So that was kind of a good target to play to the downside. And you can see it actually got right by daily support. Let me pull this up on a daily chart really quickly, and then we'll keep going with the list. So I certainly respect those levels in short 007, and I do have them on some of my other charts on my screens. But most of the time for the levels on how I compiled it, for those of you in the small account mentorship, y'all know most mornings, not every morning, but most mornings I do send out a morning update. And in that morning update, I talk about the intraday levels for the day. A lot of those are based off of either technical levels, like my moving averages, my ATR trailing stops, things like that. There are psychological levels. So, for example, 14,800 is a psychological level, right? That would have been one to play into. 14,900, you can see that's where we stalled at recently, right? Those big round numbers, that's where the algos certainly like to play into. So those are ones to be mindful of. And then price levels. So, like we talked about earlier, on Mara, for example, how sometimes you'll get up into a price support or price resistance where it doesn't necessarily look like, there's, and maybe there's a voodoo line there I'm not aware of, right? But outside of those, even that you'll just see the price kind of stall in that range. And sometimes it's support and it does a really good job there. Sometimes it's resistance. Like for a while on Tesla, for example, $200 was a really strong price support. We broke it towards the end of last year, so it became price resistance, and it did a good job of holding it. And now finally, Tesla has started to break back to the outside. So now it's switched back into price support. So there are sometimes those levels like that that can influence a price too. And then you can see here, right into the 10-period simplest support is where we went to for the low of today, and that's holding right now. So those are how I compile my levels personally, is between technical, psychological, and then just price levels that tend to hold. But I certainly respect both the voodoo lines and the quant pivots. I know quite a few people actually use the quant pivot levels in line with the compound breakout tool, and I've heard really good things about that. So maybe I need to look at that a little bit more closely. But for myself, that those are the main levels I usually look at. So let's go on now. COP was the next one that you guys wanted to take a look. Pull that up. Waiting for it to load. See if I can close out anything else. There we go. There we go. So COP. So COP, we've talked about this kind of setup a lot last year because obviously we're in a bearish trend. So there are a lot of symbols doing this. But anytime the price breaks below the 100 period simple and starts to go into a bearish trend, meaning our moving averages are stacked down, the 10 period simples below the 30 and both are below the 100, you need to be very mindful of when the price finally reverses back into the 100 period simple, because a lot of times when people see that, they want to start getting bullish. They think we're going to break above it because of the run up that we have into the 100. And so it's almost a trap, right? What I think of as Admiral Akbar being like, it's a trap for bulls. And the reason why is because usually you need a lot of energy, a lot of strength, a lot of momentum to get you to not only break above the 100, but then to also start to go into a bullish trend. And so here, for example, you can see we trended, we started to get a run up, but we stalled at the 100. We actually made a bearish divergent bar off that level. That's usually a good place to short from. And you can see it reversed back down. Then we had a second go of it here, another bearish divergent bar right by the 100 period simple, and it reversed back down. And now we've bounced back up and we have seen a bearish divergent bar. You did get the quick follow through of a lower low, but we are starting to kind of go into a wedge pattern where the 100 period simple is still holding as resistance, but the 30 period simple is currently holding as support. And so as we get tighter into this wedge pattern, right, it usually builds up more energy. So it's not surprising to see a squeeze form with that setup. You can see that we have a consolidating signal here on the compound breakout tool. That makes sense due to the consolidation and the wedge that we're in. Momentum is technically above the zero line, so that usually benefits the bulls a little bit more. But you can see it's pulling back, so that's not necessarily a strong bullish signal. Bollinger Bands are flat. If we do manage to break above the 100, the next target is just right above it at the ATR trailing stop. That's currently at 106.59. So I'd be a little bit mindful of that range. You can also see how this 105 range has kind of been price resistance. That's where we saw that back here. It used to be a price support level here. And every time we've tried to break above the 100, we basically still end up stalling around that 105 range and then dropping back down off of it. So would want to be a little cautious of that. Let's take a quick look at the weekly chart because the weekly might give us a better clue of which way we're going to break, right? Do we finally break above the 100 and attempt that bullish trend? Or is this going to be a rollover situation where we actually want to be in puts to play this back to the downside? We'll see if the weekly gives us a clue. So on the weekly chart, let's see, we did have recent true lows kind of off of the bottom of the range for this year. That's currently holding. We're going into a squeeze, still a consolidating signal in the compound breakout tool. Momentum saw some bearish exhaustion and is currently resetting towards the zero line. So that can mean chop or a bounce to the upside. The good news for anyone looking for this to break to the upside is the fact that we're still above the 100 period simple on the weekly chart, right? We didn't quite get down to touch that level, but we got close to it. And so far it's holding. So that's a better sign for bulls. The downside, though, is we're still struggling to get above these moving averages. That's kind of where we're chopping. The 30 period simple is above us as resistance. We're literally hugging the 10 period simple. That's what we've been doing really since about April of this year. And then the 100 period simple is maintaining support. The Bollinger Bands are very flat. So that means they're not really anticipating a break to the upside at this point, but they're also not really anticipating a break past the 100 period simple on the weekly chart, which is currently at 93.99. Also notice, of course, we're right by $100 as a psychological level. So that's doing a pretty good job of trying to maintain support. but we're not really getting a bounce past that. So not as much clarity as I would have liked to seen off the weekly chart. It still looks like it's just in that consolidation phase. Let's pull up the monthly. So on the monthly chart, well, this makes sense why we're in chop. The monthly chart is at bullish exhaustion, or it was recently, and it's been in the process of resetting. And of course, on a monthly time frame, each bar represents a month. So we could be stuck in consolidation for a bit longer. We still have a valid pullback signal in the compound breakout tool, which usually means that we're just going into the next support level to test that. If we continue to break support, right, and we break all the support levels and that remains valid, then it turns into a bearish trend signal. But right now, it's just a pullback signal. And that makes sense. We've pulled back into the $100 psychological level that's trying to hold. Do have a monthly squeeze setting up, which is pretty interesting to see. The trend is overall still bullish, but you can see it had a great run up really from the end of 2021. It, did what a lot of symbols couldn't do last year, which is actually maintain that bullish trend. And now we're finally taking a pause. And that, wouldn't be too surprising. Keep in mind, a lot of symbols got beaten up last year, right? And so the market, with the hedge funds and the bigger players, it's not uncommon for them to rotate, right? They're always kind of invested somewhere, but it just depends where. And so, for example, more recently, if I remember Mary Ellen correctly from our last conversation, we saw stuff getting pulled out of one sector. I want to say it was health, but don't quote me on that. But it started to go into semiconductors, basically. There's a lot of push rotating out and going into semiconductors. And so that's what could be happening here to COP is you're getting kind of that rotation out of it. It had a great run. The big boys took their profits, and now they're looking to put that money into something else that has more room to run. And because they're pulling out and that rotation's happening, the good news for those of you who are longer term bullish is it's not completely falling apart, but it is taking a pause, right? It's taking a breather. And so we could see this consolidation kind of last in regards to the bigger picture point of view, which means unfortunately, I don't have too much clarity on which way this daily chart is going to try and fire, right? Do we finally get above the 100 period simple and break to the upside? Or does the 100 continue to hold as resistance and we pull back down? It's just a little bit too mixed here for what I like to look at in regards to my indicators. So usually when that happens, what I personally do is I'll put this, on like a longer term watch list and I'll come back and check it. I'm not going to put any trade out there. I'm certainly not going to put any of my capital risk out there, but keep an eye on it. If it does look like it's starting to break higher, if we get more of agreement down here with a bullish setup, then I'd look to play it to the upside, probably into 110 short term, if not higher. If instead it stalls, right, these Bollinger Bands start to open lower, we start to get bearish signals down here, then I'd be looking for that reversal back down probably into 95 short term, if not lower. But not getting any sort of agreement right now on the indicators which way this could go one way or another. It's purely in a wedge. So I'd wait for it to start to break the wedge, maybe be a little bit late to the game, but at least you have the confidence, right? The higher probability of which way it's then trying to move versus basically attempting to choose a direction and it remains stuck. Short term, this might actually be a really good contender for something like an iron fly or an iron condor, something that benefits from consolidation where you don't want the directional move. You just want it to remain chopping. That might be actually the best strategy to go with at this point for COP until it finally decides to break one way or another. SM's up next. Let's pull that one up. So it looks like the market's trying to bounce up while we wait for that symbol to load. Basically went down towards daily support and is holding it. So that's a good time for bulls. Let's see. So SM here, similar situation actually. It was in a wedge pattern, right? Kept bumping up against the 100 period simple, but wasn't really breaking past the 30. So it started to consolidate. And now today we had actually two bullish divergent bars that were valid. So with the 3 bar rule, this one followed through on the second bar. This one followed through immediately on the next bar. So well done for anyone who was trading that and maybe was a little bit more aggressive on taking the signal, because that follow through certainly worked. Fix my fix your lunch while you're waiting for Thinkorswim to load, Mike. Yeah, that's usually the way to go about it, right? You grab a quick coffee, and then by the time you come back, it's like, oh, okay, thanks, thanks for the chart. Um, Back over here to SM, though, we do have a bullish signal attempting to print here on the compound breakout tool. Now, recently it's been pretty choppy, so I would still be a little bit mindful of consolidation. We do have a squeeze. Momentum, surprisingly, is still a red bar for today, even on the bounce up, but it is above the zero line. So once again, that's overall bullish sentiment. The only thing I'd be mindful of here is if the price pulls back down to hold 30 into the close. If it drops back below 30 into the close, could still be kind of at a price resistance level there to be mindful of. But this is actually starting to look like a good break to potentially play it to the upside. Let's look at the weekly chart. So the weekly chart. So good news and bad news for those of you being bullish. Good news, you had recent true lows. The Bollinger Bands have flattened out. So usually that paired with a true low is a good place to start to buy in longer term. You can see back here, for example, Bollinger Bands were flat. You had the true lows print, and then you had that nice push up. Here, you had also a pullback into support. The true low printed. That was a nice run higher short term. And so you had that more recently. So that's a good sign. You're also at exhaustion, bearish exhaustion. That's starting to reset. Now, keep in mind when momentum resets, it doesn't necessarily need to have a strong bounce to the upside, though it can, but sometimes it just consolidates. And so that's kind of the downside right now, is that it's kind of just consolidating there at the moment. We have a consolidation signal in the compound breakout tool. We have a squeeze setting up. We are attempting a bullish divergent bar for the weekly chart as of right now. Now we still have several days until that prints, so that might reverse later in the week. But if it can maintain, that gives that possibility of a higher high. The one thing I don't like about this, though, is currently the high is running right into the 30 period simple, right? That would have ideally been the next target to play into. And that's right by where we talked about that potential price resistance being on the daily chart. So it's a price resistance as well as a technical resistance. If we can manage to continue to break above that, then we might get a shot of testing the 100 period simple or the ATR trailing stop closer to $34, $35. The downside, though, is the Bollinger Bands are still flat. The lower upper Bollinger Bands actually pointed down coming towards the price. And so what that means is that as of right now, at least, they're not anticipating a breakout. They're anticipating still overall consolidation. So not the biggest fan of this setup. If I were to jump into it, because you think it is going to continue higher, you might be considering either just maybe buying the shares, right? Really protect yourself against any sort of theta decay and, play off the true low for that gradual move. Or you might just start off small on your position size and then build up to your normal risk tolerance. Because I do like how it's breaking the daily chart, but that weekly chart is still very choppy. Not necessarily a fan of that. And then CPE, let's pull up that one. And then for CPE here, similar situation, right? It's been in more of a bearish trend. It broke the 100, went into that bearish trend, had a retest of the 100 bearish divergent bar that failed to break above it. So you had that turn back, right? Nice place to short from. You do have some price support here around $30. So that's certainly helping for any sort of, you know, key level of support that's trying to hold right now. Where we have our second shot of testing the 100 period simple. You do have momentum, which is crossed above the zero line, so that adds a little bit of bullish strength. But the compound breakout tool is still in consolidation. The moving averages are still in consolidation with the 10 trading in between the 130. You have that squeeze building up. The bullish divergent bar short term, right? That allowed for that quick follow through of a higher high. So well done for anyone who took that trade. But what it's similar situation, not my favorite place to try and jump into a directional trade. So if anything, if there's enough premium on this symbol, this might be once again a good contender for an iron fly, something to benefit from the chop that we've been in the last few weeks with the idea that we're not going to break above the 100 short term and the ATR trailing stop that will continue to hold as resistance, but we're also not going to break below the 30 or below 32, right? That's going to continue to hold support. And then you just play for the chop and allow the theta decay to work in your favor as it hangs out in this level. Let's pull up the weekly chart really quickly. Well, as quickly as Thinkorswim wants to go. There we go. So on the weekly chart, similar situation. You can see where that $30 has done a really good job of holding. You had a little bit of a break below it here last year for like a week, but for the most part, or 2 years ago, I should say, sorry, in 2021. But for the most part, $30 has been a pretty strong price support level. So that's a good sign for anyone that is looking to go long that, that's been a pretty good line in the sand that's held up so far. The downside is the trend is still bearish. Momentum, though it is resetting, is still below the zero line, so you still have that bearish weight on it at the moment. You do have a pullback signal, and we are bouncing up into the next resistance, but you want to see it start to break above the 30. If it holds the 30, that it might actually be a place to short back into $30, right? The 30 period simple into $30. But if it can break above the 30 period simple moving average, then you might have a chance to go back up towards the 100 again. Similar situation, though, to what we just saw recently on SM and COP, which is the Bollinger Bands aren't really anticipating for a strong move at the moment. They're still very flat. And so that bodes back to that consolidation and leans back to more a non-directional trade idea like an iron fly or an iron condor if you can get any premium. I mean, this underlying price is relatively low at $34. So if there is premium out there in the options, that might be the better way to go about playing that shorter term while you're waiting for that clarity on, is it going to hold the $30 price level and really bounce up? Or is there too much bearish weight on this to where it starts to roll over again? And that was kind of the end of the list there. I do have about 4 minutes left with you guys. If you have any other symbols that you want to look over or any questions that you have, I'd be more than happy, like I said, to answer them. It doesn't have to be necessarily on a symbol. It can be on a strategy, right? An indicator. But that's what I'm seeing right now. Let's check out NDX. UNG and BA, certainly, guys. You can take a look at those two. BA is actually on my short list myself. So happy to pull that up. Just curious to see how NDX was doing. Yeah, strong bounce back up. So, or certainly, I say strong bounce. It doesn't look like that on the daily chart, but for the intraday setup that we were looking for, that definitely had a move back to the upside. Let's go over to BA. So Boeing, this is one that's been on my short list, and today might be the day for an entry on it. The reason why it's been on my short list, but I haven't entered the trade is because I did like the squeeze. Liked some of the recent true lows that we had, but it had already started to run past the point that I saw it. We had a bullish signal that remained valid until recently, bullish momentum. We're starting to get some pullback signals down here. But the main reason why I didn't want to jump into this trade myself is because at the time that I was looking at it, we were right by 220. And here's a really good example, once again, of how price resistance or price support can win over everything else, right? We had all of this bullish setup, we had the squeeze firing, we still had room on momentum. All of that would naturally say, hey, let's play this to the upside, right? It's a bullish trend. But you can see here 220, and you can really see this on a weekly chart a little bit cleaner, but I'm not going to wait for Thinkorswim to load that. But you can see 220 for the year has been a really strong price resistance level. And though on the daily chart we've attempted to break above that level, a lot of these bars into the close were either right by it or still respected 220, even though the intraday move was trying to break higher. And so once again, that always makes me hesitant to buy in at that level. I either want confirmation we're really breaking it, and then great, I'll continue to trade with the momentum that's left to the upside. Or I want to see something like this where we pull back into support, because now I have room to play back up into 220. So if this makes a bullish divergent bar today off of these support levels here of the 30 and the 100, this might actually make for the entry that I've been waiting on to play to the upside. So let's pull up the option chain here. So on Boeing, it's similar to what we just talked about. I think, what was it, on SPX earlier? Two ways we could look to do this. We could look to do it shorter term. Oh, probably have to be next week. But we could look to do this shorter term and do something like an unbalanced butterfly or a put credit spread, something that gives us a bit of premium. That way, if it stalls and it chops here, the idea is this remains out of the money and we take it for the quick win. Arguably, we could probably bump this up a strike level with the idea that it holds the 100 period simple. The 100 period simple right now is at 207.49, so right by the 2750 strike. So it's about a 46. Let's just round it up to 50 to make math simple. So let's say we get a 50-cent credit. As long as this remains out of the money, that's a locked in profit. If it does follow through with the higher high and bounce back up towards 220, then this expires worthless. The premium of 50 cents is ours to keep. If it does pull back but doesn't break the 100 period simple, then we actually have a max profit potential of $3. That's the 50 cents plus the 2.5 width of the spread. And that's due to the butterfly being a part of this trade idea, right? The strategy. If we really break below 207.50 though, right, and continue to move lower, let's say down to 200, which, is a strong technical level currently as well as a psychological level, then you have to be okay with a risk of $2, right? 250 minus the premium you received of 50 cents. So that's one way to play it. Once again, don't need the move to be as directional for that to ideally be a profit. But if you do want to play it a bit more directionally, and maybe we keep this out to next week, we could either do something like an out of the money call. So maybe something like the 215 or 217.50 with the idea that we bounce back up towards 220. If we were to tack 220, right, those would be in the money. They would allow for a profit. We could look to do a vertical spread. I actually kind of like the vertical spread. That's $1.27 cost basis, 373 profit potential. If we bounce up but stall at the 10 period simple, which is at 216.94, so let's just call it 217, we know that we're partially in the money by roughly a $2 intrinsic value. $2 intrinsic value versus a cost basis of 127 would certainly allow for a profit. Keep in mind, if that bounce happened by the end of the week, there would still be extrinsic value too. So that would be a profit either way. If we bounce all the way up to 220, then we know we're back at our short strike. And that allows for a max profit potential of 375. So kind of like that idea too. That one, let me mark this one down. I'll have to take a look at this into the close, because I want to confirm that bullish divergent bar remains valid. So I probably won't open this now, but that is a setup I've been watching. So now that we've had the pullback, that it's confirming support, even if it still stays in consolidation, there's room to play for a bounce on support back into resistance levels to take advantage of that. Not necessarily the trend move, but at least back into those ranges. Um, so I don't think that looks bad. Let's look at UNG really quickly as the last one here. So on UNG, I mean, a great example of a bearish trend, right? So there's a bearish trend. We went up, tested the 100, bearish divergent bar, great place to short from both shorter term and bigger picture view. We finally have started to find some price support down here around $5 or $6. But we're right at the 100 to test it. Now, do I think there's a good chance we could break back above the 100? Yes, technically, just because of how low the underlying price is. But we've seen things move down to zero before, right? So it's not out of the question. I mean, very unlikely, but it's certainly not out of the question from the market point of view that that could also be a possibility. So, similar situation. Watch to see how this tries to break. If it continues to hold the 100, then you might, short term for a scalp, play it back down towards $6, right? Which is that price support. Take the quick win on a reversal back into support. If we can manage to break, and not only break, but break and hold above the 100 period simple, then we might be finally trying to go back into a bullish trend, and that could be a buying opportunity. But buying it right at resistance is not what I like to do. I like to either confirm we're breaking resistance, or I like to confirm, that resistance is holding, it drops back, and then I buy at the support level to play back into that range. So that's what I'm seeing for UNG. Yeah, the 100 period simple moving average, because keep in mind, it's not like it's just me looking at that level. The 100 period simple moving average is one of those big levels that the hedge funds look at, that algos look at. And so you need, when you've been trending below it like this, you need a lot of strength to really start to break above it. And you can see that we've gotten up to test it the last couple days, but we are nowhere near breaking it. The Bollinger Bands remain flat, so they're at this point not anticipating a break. And so that's what I'd be waiting on. And I wouldn't short here personally. Usually, if I'm trading off the 100 period simple for a short, I like to see something like the bearish divergent bar form. That usually gives me a pretty clean entry to then try and short from. The second reason why is because $6 has definitely been a price support, right? We've seen it stall there. We've seen it stall there. We've really just been stuck in consolidation recently, even though we're still trending below the 100. So, I mean, if you want to be aggressive and then try and short it for a scalp, you can. But I rather just wait for the pullback, see if it holds 6, and then if it does, play from that level for a bounce back into 7, if not higher. So, and that is my time, guys. Thank you so much for joining me today. I hope that this hopefully helped you guys out. As always, may the trade be with you, my fellow Jedis. Be mindful of PAL. That's why I did the stormtroopers in the background as a reminder that the Empire is talking. So just be cautious about that. And may the trade be with you. I look forward to talking to y'all next time. Bye, guys.